Hello, traders. Following the latest labor market report from the United States, Wall Street has registered its best week of the year, propelling a global rise in other stock markets. As a result, Japan's Nikkei index jumped by 2.1%, while the Australian index marked its fifth consecutive session of gains. In the wake of the U.S. labor market report, the U.S. dollar index experienced its sharpest decline since July this year. The weaker than expected non-farm payrolls data fueled speculation that the U.S. Federal Reserve may hold back from further rate hikes. The CME FEDWATCH tool now indicates that over 90% of the market participants anticipate this stance at the start of the new trading week. Notably, Jerome Powell, the chair of the Federal Reserve, has conditioned future policy moves on incoming economic data and emphasized the importance of a balanced risk assessment. In other words, the U.S. regulator aims to avoid a recession and intends to proceed with the utmost caution. This week, several members of the Federal Reserve, including its chairman, are scheduled to speak at various events. Therefore, the markets may get additional insights into the direction in which the U.S. Central Bank is planning to move. Weak U.S. employment data, declining global manufacturing activity indexes, and a dip in the long-term Treasury yields put pressure on the U.S. currency. As a result, the greenback ended last week at a 6-week low and lost more than 1% of its value. This downturn marked the most significant decline since mid-July, commencing the new trading week. The US dollar stood just above the 105-point mark against the G6 currencies, maintaining a narrow fluctuation range between 105.00 and 105.20. Yet, dollar bears might want to temper their enthusiasm given that factors that can potentially drive the dollar are still in place. While geopolitical tensions and the threat of a global recession seem muted today, they may soon regain prominence, potentially propelling the dollar's rise once again. A sustained bearish drive for the dollar would require convincing signs of improvement in the eurozone, China, and other regions. When it comes to China, the current outlook for the world's second-largest economy does not inspire great optimism, although the Chinese officials paint a promising picture of long-term prospects. Over the next 5 years, China plans to ramp up the import of goods and services, targeting a total import value of $17 trillion. Furthermore, the nation is committed to protecting the international business environment and lifting restrictions on foreign investments in manufacturing. Over the weekend, newly appointed Chinese Finance Minister Lun Fun announced that the government will accelerate the issuance and use of state bonds. China's sluggish economic activity has negatively impacted the Asian-Pacific region. For instance, Japan has witnessed a decline in new orders from abroad for the first time in 14 months. Moreover, its composite purchasing managers index for October decreased, reflecting a downturn in the manufacturing sector. Initially reported at the level of 49.90, the final composite index edged up marginally to 50.5 points. Despite this slight revision, the figure marks a drop from September's value of 52.10, signaling a reduction in business activity and representing the weakest data since January this year. Notably, the PMI in Japan has been declining for 6 consecutive months now. The Japanese economy has been grappling with a persistent deflation for years. In response to this, the Bank of Japan remains committed to an ultra-loose monetary policy, steadfast until a confident rise in wage levels is observed. However, potential turning point looms as a human intervention may soon make its mark. As recently reported, Japan's largest industrial union, USDX, is campaigning for a 6% increase in overall wages. Discussions on wage hikes are scheduled for the spring of next year. In the meantime, the Bank of Japan appears poised to maintain its dovish stance until inflation constantly hits the 2% target, and naturally, such remarks from the Japanese officials have put the yen on a shaky ground against the US dollar. Despite this, early Monday saw the yen attracting buyers with the dollar-yen pair trading around 149.50. However, during the Asian trading session, the yen's corrective rally fizzled out. The peers retreated and the pair reversed its course, climbing within a narrow range of 149.20 and 149.70 yen. On the other hand, bullish traders stay cautious amid rumors that Japanese authorities might step in with a direct intervention in the forex market to stop the yen's decline. The Australian dollar was also trading cautiously as a 0.6515 against its American counterpart. After a sharp rise on Friday, when the Aussie broke above the support area of a 0.65, its upside momentum waned. On a Monday, the Australian dollar was trading notably lower even against a weakening US dollar. During the Asian session, the AUD-USD pair was hovering in the tight price range of a 0.6504 and 0.6524. The hesitancy amongst traders in partly attributed to domestic factors. The Reserve Bank of Australia is set to announce its decision on the key interest rate tomorrow, leaving market players cautious as clear predictions are hard to make. Reserve Bank of Australia Deputy Governor Michelle Bullock recently stated that the regulator would not hesitate to raise rates in response to inflationary pressures. On the other hand, Australia's third quarter inflation rate was reported at 5.4%, marking a decrease from the previous value of 6%, but still surpassing the forecasted 5.3%. As for the New Zealand dollar, the situation here appears to be less favorable for the currency despite some support from the economic promises made by Chinese officials, which beyond sentiment among its trade partners, the Kiwi opened the new week in a negative territory, trading within the range of 0.5984 and 0.6003 against the US dollar. It lingered close to the 60-cent mark, approaching a two-week high. Caution sentiments marked the start of a Monday's trading in the Asian-Pacific region. That's all for now. Stay tuned for more updates with the InstaForex TV, and we appreciate your feedback. Please leave your questions and comments below, and see you soon.